So it is time for SoFi's earnings call next week, and man, I am excited for the call because it looks like Wall Street is setting up once again for something beautiful to happen for us. So let's talk about that, and more importantly, exactly what matters on this earnings call for SoFi stock. And I'll give you my exact plan for SoFi stock in regards to what's going on around earnings. But I have to give you guys a massive warning as well about Wall Street and what I think they're also going to do. So you got to make sure you get that as well, so that way you don't get stuck in a bad situation. Just make sure you like the video if you like getting the truth without the hype. And make sure you like the video for all the creators that you like. That's how you show them that you really enjoy the video and how you actually support those creators online there. So do it for everybody that you like. Okay, so the perfect setup that we talk about in regards to an investor is basically what we got last quarter. You basically get, double beat, raising guidance. All the numbers look great. Everything is just, basically not perfect, but great all the way around. And Wall Street beats the stock right back down into that $6 range. That is the exact setup you want as an investor, and it's possible we get that same exact setup again. Yeah, it's been great, trust me, to be able to add in those low six numbers, mid six numbers or so, and then see the stock run up after that really fast into earnings there. It was really a quick move, over the span of just a couple of weeks coming into the earnings call here. So it's going to be very interesting to see if Wall Street continues the, hey, they double beat, raise, we beat it into the ground a few weeks later, or are we going to finally see it kind of go Palantir style and finally go to that other direction, get over that $10 mark and stay over that $10 mark more importantly. That's what we have to have, and that's what we want as investors. And I'm not sure yet we have enough things in place for Wall Street to give us that particular bump up over that $10 mark. I still think there's some other things that are coming here we're going to discuss specifically that have got to happen before we actually see that. But either way, you don't want to wait for that to happen, just like Palantir, right? Remember, with Palantir, it basically everybody was saying it's going back down to 7 again. Don't worry about it. Just sell and take your profits and move on. That ended up being the wrong choice because Wall Street had other ideas. So I could be completely wrong in regards to the timing to this. That's why I just buy when it makes sense. Then I don't have to worry about timing anything. I've already got full positions built out. I've already got everything I need, and everything else is just bonus cherries on top. That's just going to make me a lot more money over the long run. So if Wall Street wants to get dumb longer, great, but I'm not trying to time anything, and I don't have to time anything. More importantly, those are the strategies that I teach. That's exactly what we discuss right here on this channel. So that way you don't have to play the timing the market game or the trading game or any other game that actually lose out to just straight buy and hold investing or just straight DCA investing. But that also means we don't have a definitive movement in the stock, kind of like we had with Tesla there, where we kind of knew, given how huge the run up was and how overvalued the stock got very quickly there into earnings, you kind of knew something outside of blowout earnings, which none of the delivery numbers or anything else indicated it was going to be a blowout earnings, was indicated that we were going to get that blowout earnings. So obviously we kind of all knew Tesla was going to go down after earnings, which has kind of been standard lately here for Tesla. But I think that'll change next year. But for this year, that was pretty easy to see. But with SoFi, it's not as easy to see as it was for Tesla there, which we actually went through Tesla's earnings in real time together. And if you want to be able to do that with me, talk to me about it in real time, see all my buy and sell alerts in SoFi, Palantir, Tesla, and a lot of other stocks like that. See my complete watch list with price targets, all that good stuff like that. Take advantage of the earnings flash sale that's going on right now that is going to disappear in a flash. That has all that information in it, plus 5 free courses, free coaching, all kinds of other things in there, guys. Check out the pinned comment down there. Take advantage of it before it disappears, and we'll discuss all the rest of it here at the end because we got to get into SoFi's earnings a little bit more. So there are 4 things this time around that I believe matter the most on this earnings. Now, of course, there's more to it. Something else could pop up. But in regards to the core 4 that I'm kind of looking at, these are those 4 that I'm looking for specifically, exactly why, and then we'll talk about what my plan is. And of course, the big warning that you got to understand as well. Don't worry, we'll get to all of it. Number 1, do they continue to be profitable? This one is an easy one for me. I think this is easily a yes. But you've got to understand, we are dealing with Wall Street here, and until you've done it, 4, 5, 6, 7 times in a row in regards to earnings being profitable there, they don't always really buy it all that much. It's just kind of the way Wall Street works. They'll ignore the fact that, hey, the previous 10 quarters in a row, they performed epically, beat every time, raised every time, gave us a path to profitability, executed to it on point perfectly. Everything was perfect about it. They're going to ignore all that sort of stuff and go, oh yeah, we'll prove it for another few quarters. So that right there becomes something that they are looking for is, are they going to be profitable again or not? Now, I have no doubt in my mind that they will be, but nonetheless, that is something that Wall Street's watching. And it is, if we don't get that, now we got some other issues coming up there that we've got to address as a stock. And in regards to owning the stock, some of the thesis behind the stock I won't say falls apart, but it definitely puts a big roadblock or a big, pothole in the road to us seeing that above $10 mark and holding that $10 mark. So something you got to watch out for. Just one of those checks in the box we have to get this time around. I have no reason to think we aren't going to get it, but nonetheless, I had to include it here because it is vital to the long-term thesis of this stock. Number two, what is the impact of slowing lending? Now, look, they guided to it. They told us they're basically slowing their lending down until we actually get in a better interest rate environment for themselves. Basically, they're just taking on super high quality loans, and that's basically it for now. It's not like they're getting rid of it altogether, but they're actively not accelerating the loan growth for now. They're going to do it in the future. They're not doing it right now, which some on Wall Street really, really, really hate. Now, for me, there's some positives along with this that really interest me as a shareholder long term. So when I think about this in terms of slowing down lending, that gives your other business segments that we need. Basically, we don't want a bank multiple, we want a fintech multiple. It gives those fintech segment, pieces of the pie, pieces of the business, time to continue to be a larger and larger part of revenue and a larger part of those profits, more importantly. That gives that leverage, kind of that lever there in terms of, is it 60% this and 40% that? It brings that much more in line. And the other positive that I see with it is that it gives us an easy switch to flip to not only increase revenue, but profitability as well. Most companies do not have this luxury, guys. They do not have the ability to just, when they want, flip a switch and all of a sudden there's revenue pouring in and profits pouring in. It's just a very, very unique situation that you don't see very often with any publicly traded company where they can just flip a switch and magically turn on money, basically turning the money printer on anytime that they want to at that particular stage, at that particular level, more importantly as well. So it's a luxury item that they have there. That is something that Wall Street hates in the short term, right? Because Wall Street doesn't care about what happens a year from now, 2 years from now. They want you to maximize profitability to the max today, tomorrow, yesterday. They want it now. So that makes it very, very unfavorable with Wall Street. And that's why we got to kind of watch it, is how much of an impact. It's a balancing act. They got to do what they know is best for the business long term, but give Wall Street just enough to keep them from freaking out, per se, about the fact that the business itself is slowing down. That's why they give the guidance the way that they give the guidance. And I think Noto has done an excellent job of executing to exactly what he needs to execute to kind of balance that act, per se. So I don't have any concerns there, but it's definitely something that I'm watching. And we'll discuss Wall Street more here in just a second, guys. Don't worry, we'll get to them as well. Number three, will they continue the beat and raise strategy? Now, this is something they've done basically for 12 quarters in a row now. Is that 10, 12, whatever the number is now? Too many quarters in a row now to count. Are they going to continue to basically beat on everything and then raise guidance once again? That's been the standard. That's been kind of what they've done. That's kind of what Wall Street has slowly started kind of expecting them to do. So let's see, are they going to implement that strategy once again of sandbagging some of the numbers, sandbagging some of the guidance, and then giving us that double beat and that raise there on the back end? I don't have any issues with it whatsoever. I think they're in a great position to do it once again, especially considering they're controlling the slowing of the lending and such, so they can kind of boost the numbers however the heck they need to in the future. So I see no reason why we don't see that strategy implemented once again. But again, Wall Street's starting to catch on to it a little bit here. So they're very, very slow, guys. I know. It's just part of those guys. But nonetheless, that's something else I'm watching for, is that's becoming more and more of an expectation. So are we going to get that again? But the next one may be the biggest one in regards to where the price of the stock goes long-term ultimately, guys. So we got to talk about this last one here. And that is, do we see significant growth in financial services and the tech platform? This is key to the bull case with SoFi, guys. If these continue to grow better and faster than the banking segments do, we are going to put ourselves in a spot. SoFi is going to put us in a spot to get more of that fintech multiple versus a banking multiple. And all you got to do is plug in a fintech multiple versus a bank multiple, and you see it makes a massive difference in regards to the share price. I mean, we're talking, should the price be closer to 20 versus closer to 5? That right there is kind of the margin that you have within that particular gap. So we have to see SoFi put up great numbers quarter in, quarter out in these two segments in order to justify more of that fintech multiple as much as we can. I don't believe we'll ever get a full fintech multiple because you can't. There's too many banking, they have a large traditional type banking segment to the business itself. So you're never going to get a full fintech multiple, but I don't need a full fintech multiple. What I need to do is I need to stay away from a traditional bank multiple and get a hybrid there somewhere in between. Of course, the more that these services grow, the better and the closer to that fintech multiple you'll be able to get. So basically we got banking multiple here, fintech multiple here. Well, you can kind of just, figure out logically where are we going to fall there in that spectrum? Of course, if there's more business coming in on the tech platform and, personal investing, all kinds of maybe some future endeavors as well that are more tech oriented, that right there could push us closer to that tech multiple there. Kind of think of it kind of like Tesla, for example. Even though 85% of their revenue and profits comes from cars and things related to the vehicles and all that good stuff like that, they're still not given a multiple like a car company is. And I don't think they should either. They're given much closer. Actually, they are given much more of a high growth tech company type of multiple in regards to the stock itself. Obviously, SoFi has a better mix than that, but it's a much younger company and it wasn't spitting out profits and didn't have the runway that Tesla had earlier on. Obviously, Tesla has kind of been a cyclical part of their business right now, so it's not as good as it was prior. However, we're talking long-term here, and long-term here, that's why Tesla is getting that multiple. So kind of think of it very similarly in regards to SoFi. We need, even though it's actually better than what Tesla's is in regards to car company versus all the other tech stuff, we've got to see SoFi continue to move those other things in the right direction there, because lending can quickly take up a lot of the market share there and quickly swing that multiple back the other way. So right now is that time where we got to see that continued driving growth on those other sides of the business. Basically, if we can drive that number as close to 50% as possible, that will give us the best chance of really getting a great multiple that's closer to fintech than it is actual traditional banking. So what is my plan with SoFi stock? Well, again, you guys know I don't like to play games around earnings. It's never more manipulated than around earnings. There's all kinds of crazy things that happen around earnings. And more importantly, when is Wall Street finally going to push this stock and give it a very reasonable multiple? Basically, when is big money going to come in? We're seeing in the data institutional ownership going up, but when are we going to see that big institutional money come in and really kind of push us over that $10 mark long term, because it's basically taking it from trader controlled over here to more institutional control? That's kind of the big thing that we're wondering. And of course, we won't know until after the fact that happens. That's the hard part right there. Investing is you don't know until after the fact. That's why building out your positions is so important in regards to stock market investing and taking advantage whenever you get opportunities. And then if you get an even better opportunity, great, you take advantage once again at that lower price. So yes, although I built my position out way back when it was in the $4, $5, $6 range or so, that's okay. I'm happy to add more shares. I am ready to pull the trigger at my price target for SoFi if Wall Street gets dumb once again after these earnings and gives us any sort of weakness in the stock itself. I am prepared. Now, if they do not execute for some reason on this earnings call, then there might be cause for concern there in regards to the stock. Now, I don't believe after 12 straight great earnings calls, one bad earnings call necessarily shakes my faith in regards to the stock long term, but it's absolutely going to set us back a few quarters in regards to us getting any sort of momentum in the stock long term and getting us up over that $10 mark. So you have to be aware of that. You also have to be aware if it decides to run after earnings, don't chase the FOMO just yet, guys. Make sure you're looking at the numbers, doing your valuation on SoFi, and seeing if it makes sense. Sometimes the best thing to do to kind of get rid of FOMO is just a straight DCA. Just start DCA now, DCA after the earnings, and just basically putting it on a schedule. Then you take all emotion out of it. Then you're buying the highs, of course, but then you're also buying the lows as well, and you don't have to time anything. So for me, I'm looking at my price target because I already have a full position plus lots and lots of extra shares, willing to add again. But for a lot of folks who don't have that, maybe starting off with a simple DCA and then learning how to do price targets, how to do evaluation and everything else to where you can more effectively put in price targets as the stock goes and starts to move the other direction on you. But Wall Street may have other plans, regardless of what happens on its earnings. They may have something else altogether. So let's get to that warning next. So what is the warning about SoFi? So this right here is probably my biggest concern with SoFi overall. It's been my biggest concern for some time, but it's something that until we have tangible proof that the narrative has flipped, I'm afraid Wall Street is going to continue to hold it against SoFi, and that is that it's strictly just a bank, and Wall Street for now viewing it as simply a bank, or even less, a student loan servicer only, because some folks hadn't even figured out they're not even really doing that business hardly anymore. That makes up a very small part of the business compared to a lot of other things later. Some folks aren't even around, haven't wrapped their heads around that yet. That hurts the stock in the short term, which means more fear narratives, more it's never going to get a fintech multiple. It's always going to get a bank multiple. Apply the bank multiple to it. Now it's worth $2 a share or $3 a share, whatever the heck the number is. And that's not what I believe will be the case long term. And more importantly, the numbers show me that's not going to be the case long term, because so much of the revenue is coming from other places. And more importantly, those last quarter, at least, and the quarter before that and the quarter before that, have been accelerating. So if we continue to see acceleration in those, I don't care about what Wall Street says in the short term. I care more about what do institutional investors think long term. So traders can think whatever the heck they want. I don't care. They're just putting out narratives to try to get the price down. I care about what are institutional investors looking at, and they are much more prudent. They're also much slower to act in regards to their investing. And guess what? If Wall Street wants to run with some crazy narrative that they should be at $3 a share, these guys are going to happily buy into it for now because they just get shares cheaper. And of course, as it runs up, they won't be selling those shares as well because they're actually giving it more of a fintech multiple in the end. So that's the one big warning I wanted you guys to have, is that absolutely can happen with SoFi, and that narrative may very well run wild. But remember, that is short term. Long term, everything will get proven out in the end. And if you want to see all those buys in real time, jump on that flash sale that's here in a flash and could disappear in a flash before it ends, where you get all that. You get 5 courses free. You get access to the best 6, 7, and 8 figure Discord out there. You get free coaching, free stock analyzer tool. You get my complete watch list with price targets. You get to basically talk about anything you want with me anytime you want. Guys, we got live Q&As. You can slide into my DMs. You can jump on our Discord there and ask me questions directly. I answer every single question that I'm asked. So make sure you check out the pinned comment down there and see if a membership's right for you, and see if you want access to all that. You want to jump on earnings calls with us? Awesome. You got to get access to that group. Make sure you sign up for the mastermind there. Take advantage of that flash sale before the flash sale ends. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.